Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 30th of January, 2024. Thanks for joining me for episode number 2613. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have? What do we have this morning? So, earnings are front and center right now. The market's in a mixed posture. The Russell coming off a little bit, the Nasdaq coming off a little bit, the S&P off 11 points. But really, Europe is holding up pretty well. Really a mixed bag this morning. General Motors reported this morning. Marathon Petroleum, UPS, Cisco, HCA Healthcare, Pfizer, Johnson Controls all came out. General Motors reported $1.24 versus $1.16 beating. It beat on its revenue as well. Marathon Petroleum was way higher, $3.98 versus $2.20 on $36.8 billion. Very profitable, beating its earnings by 81%. United Parcel Service, UPS, beat by a penny on lower revenue, and then Cisco came out and beat by a penny on lower revenue as well. HCA Pfizer came in at plus 10 cents, was expected at negative 22 cents, beating its earnings estimate by 145%, and so on and so on and so forth. So after the close, we're looking for Alphabet and the giant of all, Microsoft. After the close, Google, Alphabet, is expected to report at $1.59 on $85 billion for last quarter. Microsoft is expected to report at $2.78 on $61 billion for its fiscal Q2. Last quarter, those are the big ones. We also have Chubb looking at $5.12 on 9.93 billion, and Starbucks reporting on Q1 93 cents and on 9.589 billion. The Treasury came out yesterday and slashed its financing estimates, reducing its financing estimates to 750 billion. The market responded very positively to that. That's a big area. So the U.S. Treasury expects to borrow 760 billion in net marketable debt for January through March period, which is down 55 billion from October 2023 estimate, and expects to borrow 202 billion dollars in the April-June period, assuming an end-of-June cash balance of 750 billion. Again, this is a reduction from the prior expectation. This is could be seen as a foretelling of what interest rates are going to look like coming forward this coming quarter. Market popping higher. North Korea continues to launch these cruise missiles into the sea. Very provocative action there. France and Germany come out with their GDPs in line. The EU's GDP was better overnight. We talked about UPS, GM, we talked about Pfizer, and then the other one is SMCI reported yesterday, beating pretty handily its estimates, giving the tech sector all around a pretty decent boost. Again, all eyes on Google and Microsoft after the close today, and that's what's driving things. Looking at the calendar, we have Case-Shiller just came out. It missed, was expected at plus 0.2. This is a home price index. Expected to come out at 0.2, came out at negative 0.2, and year-on-year pricing was expected to come out at 5.8, came in at 5.4, missed on both counts. At 10 o'clock today Eastern, we're looking for the JOLTS job openings. This is an indication of listings in the U.S. that have remained open for the month of December. The expectation is 8.75. The prior's 8.79. The lower the number, the less pressure there is on employment. And then we get consumer confidence at 10 o'clock, expecting 115. We'll wrap up the U.S. session with the API crude oil stock change at 4:30. And then we get numbers out of Japan. Australia's inflation rate expected at 4.3. The prior's 5.4, dropping 90 basis points on the inflation rate there. If they meet that 4.3 expectation, that's a lot of relief for the Reserve Bank of Australia. And then at 8:30 this evening, China releases its MBS manufacturing PMI expected at 49.2. The non-manufacturing expected at 50.5. That's that. Looking at the S&P multi-distribution profile this morning, almost a borderline balance, but really it is in a price discovery mood. The volume's 132,000, much lower. Well, that's not a good color. Much lower than the expected. Oh, well, that didn't do it. Hang on. What's going on here? Accept my color. There we go. 132 versus the mode, which is 260,000 by the open, the cash open. We're way behind on relative volume this morning. The inventory is 86% short. 86% of the volume this morning traded below the prior close, and the range is 16.5 points. 16.5 points. Yesterday we had around 20. On Friday we had around 14.5. So relatively quiet. Point of control has shifted from 49.14 to 49.49. 49.49. That was the key target yesterday, right? 49.50. So that's that. Let's take a look at the charts. Here's what was expected yesterday. This is yesterday's video. That's not me now. The main scenario yesterday, because we were opening, as a reminder, we were opening on top of Friday's point of control. We had an overnight point of control overlaid on Friday's settlement price. Complete balance. The expectation is chop, 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 and a break higher per scenario 1. Scenario 2, if it's not able to break higher, then we're looking for it to push to 4,900, take out the overnight low. But as discussed yesterday, the more likely scenario is the overnight stat being taken out on the upside of 49.21 and looking for 27 in German. 27 is the initial test, and then of course the most recent high becomes the next play. The big number up top is the mid-century figure at 50. Okay, on the break. We also talked about, let me play that back a little bit. We talked about the fact that these profiles are stacking. Here it is. So earlier in the video, we talked about how these profiles are stacking on top of each other, and this looks like it's coiling for a break higher, right? The 49.50 again being the obvious target. The all-time high on a continuous back-adjusted basis is 50.32, something like that, 50.32 and a half. So the greater expectation, given that, as I talked about yesterday as well, let's back up a little bit. Boom. Oh, boom. As I talked about yesterday as well, is that we had one-time framing up. This is all one-time framing up, so the expectation is higher. When and how and so on, that's the hard part, right? Predicting the the next move isn't where the magic is. It's how do you jump on it. This is what happened yesterday. Complete balance. We had just absolutely complete balance throughout the morning session. Burn. Lots of chop, 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 chop. Finally, we break to the upside after breaking the range extension with a range extension down. Pretty weak low yesterday. Double TPO low in C and D period, meaning the third and the fourth brackets. The expectation here on the pullback to VWAP, the expectation is this is very likely to break lower and create an impulse down. Out of balance, that structure looked valid to me, but it failed, and it finally went back to VWAP, higher low against the IB low, and then squeeze to neutral. Went neutral, pulled back to VWAP right here, right there, and then off to the races we go. The news that came out right here on the treasuries, and the treasury markets start to move kind of in tandem with everything else. And so we rip higher, we get to the 50 mid-century figure, and we break through and we end up just chopping around up there. And then since then, all we did was we tested the 57 and a quarter. We've come off, and you could see, let's zoom in. You could see that this morning is a multi-distribution profile. Pretty steady low. We've got a bit of a line in the sand right here at 46-ish. Okay. And so we're in this lower distribution. I can't make heads or tails of this, to be honest with you. Look at the delta. It's just absolute nonsense. The market, again, taking a sleeping pill. But it's down 3,000. It's not a huge deal. The most important thing to note here is that we are below VWAP, negative delta, large lots, basically flat for the session. Not too much to write home about there. And overall, we're just trading inside of the prior day's range. The thing to note about yesterday's range, actually, this chart's a lot better at showing it. My detailed chart. And you could see that we are right here in the single prints. And what's happening here is the key element to take away from this chart is that because we're in the single prints, we broke out, we broke these highs, broke out, and we broke out on pretty poor auction dynamics, pretty poor structure. You can see there's just a stop run right here. Pretty poor dynamics, pretty poor structure, leaving singles behind. And we're coming in today having pushed up and then squeezing lower, like that. And now we're doing this on top of these singles. And what this tells me is if we don't immediately push towards settlement on a gap to settle trade this morning, then we're looking for 33, 32 test with a high probability. So this morning, as it opens and it squeezes higher, pulls back, get a poor push on a retest, sets up a short, and we're looking for about 12 points of range there through the single prints range. And if the 33, 32, 34, 32 area, this stock zone right here, this is a convergent trading stock zone, if that doesn't hold up, then we're looking for this thing to fall right back in line with its point of control. What is that point of control? Well, let me tell you. Right there. See that? So this is the profile we broke from. This profile consists of several days starting January 24th, compressing everything together through last Friday. So this was a profile that involved Wednesday, Thursday, Friday, and you could see that the point of control for this baby is right down here in the 1516. Remember the 1516? That number comes up a lot. 1516. And then yesterday we opened right on top of that. We're in balance, and then we broke away. So if we can't hold the single prints down into the 33, so the 34 to 32, if we penetrate that, you're looking for another 20-ish, 17 to 20 points lower back to balance. That's what that's telling us. Okay, so those are the structures I'm looking at. It's 8:16. I don't have that much more to offer. There's not much for me to say other than what was just covered. The crude has pushed into this old profile, but to me, crude looks done. So point of control shift up, point of control shift up, point of control shift up, point of control shifting over, shifting over. So this might push into the 77, but crude looks like it is very likely to start moving its way back to 75 down here, 75, and then 74.50 into. This looks like a rounded top to me. Crude looks like it is done to the upside, barring news. Now, Saudi Aramco got a directive today to make sure that it doesn't exceed 12 million gallons per day, barrels per day, not gallons, barrels. That it should never exceed 12 million barrels per day, cannot go to 13. And so they're trying to limit supply. And every time we get that sort of artificial limitation of supply, you get a little bloop up. But overall, what the overall effect is lower, and that's what it looks like on crude. So this morning on the S&P specifically, look for what it does on a retest up into the 50. If it struggles with the 50, puts in a lower high and starts to move lower, that's going to be the trigger short, and we're going to look for 34, 32. That's our primary scenario this morning. I know that fades the run up, but this run up was built on Garbaggio structure. Okay, and we tend to clean that up. So I'll leave you with that. Good luck. Don't forget that tomorrow's the last day for the Trade Right promotion at Convergent Trading. I know I'm trying not to push this on you to sell you something, but a lot of people need it. A lot of people need to go through the Trade Right program and generate the structure needed and the outlook and the statistical background and everything that's needed to trade properly or sustainably. From my opinion, the link for that is up there, pinned at the top. HTTPS. Well, who cares? Go to ct.pro/trade-right24. That's the link, and that'll give you some information on what that is. It's included in the membership, which includes access to the Mavens channel with professional traders and commentators on the markets, brings you into the trade talks, brings you into the study halls, AMAs, group mentoring sessions, market stats, chart definitions, There's a lot that's being offered at Convergence, something you might want to look at if you want to make this a different year, I guess, than following a bunch of random people on Discord. Good luck, and I'll catch you tomorrow morning. Take care.